So LLCs are a really versatile tool, and we use them for everything from transferring business interests from one generation to the next, just to providing simple liability protection. So anytime you have any sort of business where there's appreciable assets at risk, it's always a good idea to think about the LLC format for some of those reasons. You know, when you talk to most farmers and ranchers and you ask them what they want to have happen with the farm or ranch business, they'll almost always say, well, I want to keep that operation intact as it goes to the next generation. But sometimes that can be really difficult because you might have on-farm heirs and off-farm heirs. On-farm heirs might want to keep the farm asset base together, but off-farm heirs might want to have some share of the business's revenue but really don't want to have an active role in the business. And so one way an LLC can help you with that is that operating assets or land or the business itself can be placed in the LLC, and you can give different types of LLC interests to those on-farm and off-farm heirs. That way you keep the asset base together, but you're still able to give the individual heirs interests that are more tailored to what their needs would be. So an off-farm heir might be able to get income, an on-farm heir might get operational control of the assets. So it's a way of helping to deal with the interests of heirs that might have different perspectives on the farm, but at the same time keeping all those assets together and working at peak efficiency. You know, one of the first things I'd tell somebody if they're thinking about an LLC for their operation is make sure you engage your attorney and your tax professional. The tax professional is really important because one thing that you're going to have to choose if you set up an LLC is how would you like to tax it. Taxes for LLCs can actually be selected. You can choose to be taxed as a partnership, which means that all of the income and expense items actually flow through the LLC and are reported on the individual tax returns of the owners. And so that avoids having a layer of double taxation at the entity level. Everything just basically flows through the members. But for some operations, it makes a little bit more sense that they are taxed at the entity level, especially if that entity is going to provide things like salaries, retirement benefits, insurance. Those are deductible items for a separately taxed entity that wouldn't be deductible for an individual. So on an after-tax basis, in some circumstances, it might actually be better for the LLC to pay its own taxes rather than to be a pass-through. You want to talk to your attorney as well, because there are lots of considerations that you need to put into your operating agreement. Every LLC needs to have an operating agreement that basically serves as the bylaws for how that LLC is going to operate. And there are lots of things to consider there. One thing you want to define is how is your LLC going to be managed? Is every member going to function as a manager, in which case your ship has several captains, and you need to make sure that you have a means of breaking up ties or things like that. Or you might have one member that serves as a manager, and they basically act as the human face of the entity and make most of the decisions, although there's some decisions that you'll probably want to define as having to have a majority vote of all of the members. You have to make sure that your LLC is properly formed. You have to make sure that you pay all of your annual fees for the LLC, and you have to make sure that you've respected the separateness between the LLC and you. That means its bank accounts belong to it, your bank accounts belong to you. You're not using it as your personal piggy bank. There's not commingling of assets or things like that. You've respected the separateness, and if you've done that, generally the courts will too.